I am more bullish than ever on Bitcoin.
Hi everyone. Welcome to another episode of Game of Investing podcast. Today we are going to delve into a very interesting asset class that's called Bitcoin. Well, I was skeptical of Bitcoin until August 2023, somewhere around there. But now I've changed my stance. I've turned bullish on Bitcoin. Well, I was skeptical for the same reasons you were skeptical on Bitcoin as an asset class. What are those reasons? Very common reason is the price volatility. Bitcoin's price keeps changing, fluctuating too much that people are scared to invest in Bitcoin. Second, it's the government regulatory overhang. What if governments ban Bitcoin? And there are many governments or sovereign countries that have banned Bitcoin. Very valid concerns. I was skeptical due to the same reasons, but I've changed my stance and become bullish due to the 4 strong tailwinds I'm expecting in towards the Bitcoin as an asset class. And what are those tailwinds? Well, there are 2 tailwinds I'm going to bring up in the front, and I'm going to explain a asymmetric strategy that is followed by one of the companies out there, which is an equity-based company, and how to participate in a Bitcoin bullish theme in an asymmetric way, in such a way that, what do I mean by asymmetric way? In such a way that you lose less when it goes against you, but you win significant proportion when it goes for you. The first strong tailwind is large institutions spot Bitcoin ETF approval. There are 4 large institutions that have filed for spot Bitcoin ETF approval. That includes BlackRock, Fidelity, Grayscale, and ARK. There could be many in the future. But when this approval comes, it's going to become a big impetus towards the demand for Bitcoin as an asset class. Imagine, today these large institutions hold close to $75 to $100 trillion in terms of fixed assets and pension funds. Even 1% of that fund coming into Bitcoin as an asset class can create a huge deluge of funds, which can create huge uptick in the demand. So that is the first demand uptick or the tailwind. The second tailwind, now again, before I go to the second tailwind, this approval is anticipated to be completed before January 2024. It might or might not happen again, but that's a tailwind. The second tailwind is supply constraint and the Bitcoin halving that is expected to happen in April 2024. What is Bitcoin halving? It's a process or a protocol that is on the blockchain network, wherein every interval of 210,000 Bitcoin blocks, there is a halving that is expected to happen, which means today, if I mine Bitcoin, if I mine for Bitcoin or you mine for Bitcoin, by doing approval of transactions on the blockchain network, we receive close to 6.25 Bitcoins for every transaction that is being approved. But come April 2024 approximately, that is going to become half, like 50%. That is, for every approved transaction that is happening on the chain, on the blockchain network, somebody is going to receive only 3.125 Bitcoins. So the supply is halved. And every time a halving has happened in the past, there are 3 halving that has happened in the past. After every halving, the Bitcoin price has gone up significantly. You can see on the screen, it has gone up almost 10x after every halving. This might happen or might not happen this time, but halving, what happens is, my thesis is, it is going to create a supply constraint on the network. There is already a significant supply constraint of Bitcoin today on the blockchain network, because 75% of Bitcoin who are holding Bitcoin are holding them in the long-term accounts that is not being traded actively. Only 23% is being traded actively, and of that 23%, only 5 to 10% has significant volume. So Bitcoin is today being very crunched on the supply, and with the halving that is going to happen after 6 months, it is going to further dip the supply by another 50%. That is because that's the only way, mining is the only way new Bitcoins can come onto the network. And when that supply has become half, you can imagine what kind of supply constraint is going to create. There is on one side there is a significant demand uptick, and other side there is a significant supply crunch. You know what happens when this happens? There is a significant imbalance that can create an impetus to the Bitcoin price in the foreseeable future. So those are strong 2 tailwinds I'm talking about. Now, how to de-risk Bitcoin risk that I brought out in the beginning, like price volatility and the government regulatory overhang? Well, the approach is just dollar cost averaging. Just like any other asset class that we dollar cost average, the DCA approach to buying stocks, buying month on month like a 401k, or buying quarter on quarter, right? What happens when you do that for a long period of time? The cost gets averaged out. You are handling the volatility of the price by averaging out the cost, because you're buying consistently. The price gets dollar cost averaged, and that's a brilliant strategy to de-risk from the price volatility. Now, how do you de-risk from the government regulatory approvals? That is something very difficult to de-risk itself. But my strategy is the case study for today's podcast. That is Microstrategy as a company. Microstrategy is a BI analytics, business intelligence analytics company that has a strong product, which is cloud-based SaaS product, which is selling even today very well. They recently partnered with Azure, Microsoft, to bring in AI enhancements to their products. So they are doing really well as a company. Today they carry close to $5 billion Bitcoin on their balance sheet. Microstrategy, headed by Michael Saylor, is the first corporate to adopt Bitcoin on its balance sheet. Michael Saylor is a staunch proponent of Bitcoin, and they decided to buy Bitcoin quarter on quarter consistently. Today they have almost 158,000 Bitcoin outstanding on their balance sheet, which is not valued right. And that is the third tailwind I'm talking about, because today the MicroStrategy holding of $5 billion is not reflected in its price. It is impaired down, something called as digital asset impairment, which is an accounting standard based on which Bitcoin, if a company is holding Bitcoin in its balance sheet, it is supposed to reflect the impaired value, which means the lowest value at which the Bitcoin has traded during that year, and not at a fair value. Now FASB, which is Financial Accounting Standards Board, has filed for fair value accounting for Bitcoin as an asset class on corporate balance sheet. When that happens, today if some MicroStrategy had bought Bitcoin at a cost price of say $28,000 on an average, which is the case, but if the Bitcoin price goes down to $18,000 during the year, it has to register a loss of the difference of the cost price and the lowest value, and take an impairment hit on the balance sheet, because today the book value is reflecting a total outstanding Bitcoin cost of only $2 billion, whereas the actual holding value is $5 billion based on the fair value. So there is a re-rating that could happen when the FASB approval of fair value accounting happens, supposed to happen during 2025, but the corporates are given a go to adopt that strategy of fair value accounting even before that, right? So that is the third way tailwind I'm talking about, a wide-scale corporate adoption of Bitcoin on the balance sheet. Only 3 to 4 companies hold it today, like MicroStrategy, Coinbase, Tesla, Square. And there are a few mining companies out there which are holding the Bitcoin on the corporate balance sheet. So that is a third tailwind I'm talking about. Now you are dollar cost averaging, de-risking the price volatility on one side. The other risk, even if Bitcoin goes to zero, with whatever regulatory hurdles that comes in, the hit that the balance sheet will take on these corporates is going to be low, because like a MicroStrategy, which has a strong product, like a cloud-based SaaS company, is valued on its product today. It's not that it's valued exactly based on the Bitcoin holding because of the accounting standard rules. And so you're de-risking, even if Bitcoin gets to whatever price down, with whatever hurdles that is out there due to regulatory pressures, you are okay, because MicroStrategy is got a strong product and it's enhancing AI theme. That is the most important thing. Now, what is the fourth big tailwind I'm talking about? Is wide-scale sovereign adoption. Sovereign adoption is a currency risk that is out there today due to governments pumping money and liquidity left, right, and center. Central banks doing that. There is a significant currency risk out there, and countries are coming with their own digital currencies to streamline and get into the digital future. You have a digital yuan, you have a digital rupee, like for India, and you have Bitcoin, which is held by US government. US government is the largest large economy that is holding significant amount of Bitcoin on the sovereign, right? It holds almost close to $5 billion worth Bitcoin today. So a wide-scale sovereign adoption of digital currencies, I'm not saying Bitcoin, digital currencies is a big tailwind. Tomorrow, in a digital future, when everything happens on the blockchain network, you could expect digital currencies being traded against Bitcoin. Bitcoin might become the standard of norm as a base for all other digital currencies to trade against. That could be distant future, but that's a possibility. So there are 4 tailwinds. Few of them could happen, few of them might not happen. But as a strategy to de-risk the price volatility And as a strategy of wide-scale corporate adoption, I felt I need to bring this case study of MicroStrategy today, which is adopting a really excellent strategy. And you won't believe this, since MicroStrategy started buying and adopting this strategy in 2020, it has been the best performing asset class out there because it has given the largest return. MicroStrategy is up 4 times since 2020, since they started buying Bitcoin. It has outperformed Bitcoin itself. It has outperformed all other asset class, including S&P and all other asset class, right? So this strategy is working well until now, and might work well because the tailwinds are only more for Bitcoin as an asset class. So thanks for staying with me. Signing off, Sandeep Anand.